Welcome to USMK Insights, where we focus on US stock technical analysis. Using charts, trends, and price action will help you understand the market rhythm and make informed buy and sell decisions. Alright, hit subscribe and let's begin today's learning journey. In a battle to minimize losses and achieve the best results, what matters most? The key is having accurate intelligence. Trading stocks follow the same logic. Every day we fight in the market. If you want an edge and want to win, what do you need to do? You need to gather information, not just collect it, but also analyze it. America's three major indices are the key battlegrounds. They are where we gather data because they reflect the whole market. Take the Dow Jones, for example. Its current trend can show us the state of the overall market. So what's happening? The market is indecisive. Why is that? Let's analyze it. Let's review yesterday's session. The market spiked, then pulled back. All three major indices showed this pattern. They didn't continue Tuesday's strong rally. On Tuesday, optimism drove the market. The three indices all performed well, but the market didn't maintain that strength. Instead, it pulled back. Why did it pull back? At this level, the market is undecided. As we can see, technically, you can clearly sense the Dow Jones is showing a clear technical M-top. An M-top pattern, right? It even broke a key support level. Once it broke down to move up again, it needs to reclaim the previous support. After breakdown, that support turns into resistance. So now it faces resistance. There's resistance above and support below. That's why it's stuck. Hard to go up or down. Either way is difficult. There's strong resistance above, creating overhead pressure. So what's needed? A surge in volume. There's also support below, a potential W bottom. If it drops further, it will still face support. There's resistance on the downside too. So here the market is indecisive. It's stuck at this level. So from a sentiment perspective, even though on Tuesday bullish sentiment spiked briefly with optimism, it didn't last long. As we've analyzed before, this was only a short-term reaction, but it was very brief, just one day, only lasted a day. By the next day, the momentum faded quickly. There was a gap up, then a pullback. That's what happened. So what does this tell us? Looking at the last 2 days, optimism spiked then faded. It didn't last long at all. This means the market is indecisive. There hasn't been a strong increase in volume, only a mild uptick, not enough to push the market higher. So right now there's obvious resistance above. There's no strong buying interest at this level. No aggressive moves from buyers. So at this level, the market remains hesitant. That's why the trend is also uncertain. So this is a very indecisive spot. Even in the best case scenario, over the next 1 to 2 weeks, at best, the market will likely stay range-bound and move sideways, consolidating in a range. After this, it will decide its next direction. As for which way it will go, up or down, the market currently has no clear signals, so it's hard to predict which way it will eventually go. So for the next week or two, it will probably move sideways, consolidating at these levels. Because right now the market is indecisive, resistance above, support below, so sideways action is the most likely scenario. So looking ahead, the three major indices will likely move similarly. They are all in the same situation, whether it's the Nasdaq or the S&P 500, both face clear resistance above, and they also have strong support below. Compared to the Dow Jones, the Nasdaq support on the downside is a bit weaker than its resistance above, so it's not as strong. That's why, going forward, it will likely follow the same pattern. The Dow also has clear resistance above. Expect more sideways consolidation over the next couple of weeks. This is the most probable scenario because in today's market, even if there's some bullish sentiment and some upward momentum, there's still resistance overhead. But on the downside, there's strong resistance above. So market volume stays low. We haven't seen a breakout in volume, no strong buying pressure. In fact, compared to yesterday, volume even dropped a bit. What does this show? It shows that right now there's no strong push to the upside. Buyers are not eager. Even on Tuesday, when optimism surged, it didn't last. There was no follow through. To keep the rally, you need commitment, but the market lacks conviction. So in this case, what does it take? It's not just talk or news headlines. Words are not enough. What's needed is real action in the market. That means volume. If there's no clear increase in volume, then we won't see a strong move. It doesn't need to be huge, just a healthy volume and price action. A moderate pickup in volume would show commitment. If you want an uptrend, you need to show that with volume. The most direct sign is clear volume support. Right now, we don't see that. No volume breakout, which means no real buying power. This only makes the market more hesitant. So at this point, even over the next week or two, the best we can expect is sideways action. So during this period, what's our strategy? Looking ahead, the next week or two should be relatively safe at these levels. It's unlikely the market will suddenly reverse sharply. A major pullback isn't expected. On Tuesday, optimism picked up in the market. A quick reversal downward is unlikely. It would be difficult to see a sharp drop here. So in the short term, the next 1 to 2 weeks will be choppy. Sideways movement is likely here. That's actually a healthy pattern. During this consolidation period, there will be opportunities. Individual stocks may perform well. So the strategy is simple. Focus less on the indices, more on stocks. Individual names have upside. There are still opportunities. For example, recently, a clear winner is Nvidia, one of these 7 big tech giants. Did you notice Nvidia's performance? Nvidia on Tuesday didn't perform as well as expected. It lagged a bit, but as a top tech giant, Nvidia remains fundamentally strong. However, its reaction didn't match the market sentiment on Tuesday. It was not very strong. But on Wednesday, it started to stand out. After hours, Nvidia surged over 5%. That's much better than other tech giants. Its performance led the growth. Why did this happen? It's because of Nvidia's earnings report. The earnings were released after the bell. Specifically for fiscal year 2026, their Q1 revenue beat market expectations. Before the report was released, there were a lot of concerns. Previously, their 720 chip was heavily restricted. Export bans had a major impact, so the market was worried about their Q1 results. There was real concern. Investors were clearly worried, but when the final numbers came out, the results showed Nvidia beat expectations. So overall, the outlook remains positive. And looking ahead, since right now Nvidia is a leader in AI chips, it's holding up well. After the earnings report, it has remained strong. Despite export restrictions from the Trump administration, its results have stayed solid overall. So in general, its performance going forward is something to watch. It's definitely worth keeping an eye on. So you can see after Tuesday, Nvidia's performance climbed higher on Wednesday. On this platform, we can clearly see at this level, Nvidia broke past Tuesday's high. It set a new high above Tuesday. It broke out above Tuesday's high, and this move was supported by increased volume. From this, we can see trading volume expanded. You can check the volume ratio data as well. This indicator is worth watching. The volume ratio increased by 1.24%. While not huge, it was a clear uptick, a moderate increase in volume. This shows the market recognized Nvidia's strength. After this earning release, Thursday's performance will likely break out above this range. We're not making a long-term forecast, but in the near term, the trend is strong. Even just in the next couple of weeks, the short-term trend is clearly bullish. And for the long term, over the next 1 to 2 weeks, the main trend will continue upward. That's the key trend for the next 1 to 2 weeks. In the short term, Nvidia remains bullish. There is still room to rise. The upside could reach 153. This is possible in the next 2 weeks. It's unlikely to stay at this range. Technically, it's unlikely to stall here. From technical perspective, the trend is positive. This can be seen as a bullish continuation. Because here, with resistance overhead, this area is a consolidation. It's digesting overhead resistance. So right here, Nvidia is building momentum. This is a bullish setup. Once enough momentum builds up, combined with positive market sentiment and its own strong performance, since it withstood Trump-era export restrictions, even with those restrictions, its revenue remains stable. Nvidia also found smart solutions. For example, in the Chinese market, China is one of the largest AI markets. It's a key market for Nvidia. This market is extremely important for them. So how did they respond? Their approach was to launch special AI chips for China. There are light versions. Though scaled down, they can't meet the highest end needs of China's top tech companies for computing power, but for small and mid-sized companies with lower demands, these chips are good enough. So in this market, Nvidia can still compete. They can maintain their presence. They won't lose this market. Looking ahead, even though this new chip isn't out yet, expectations for Nvidia remain high. It shows their management is handling things well. Plus, despite the challenging environment, Nvidia is still delivering steady revenue, so future expectations should keep improving. They also have even more advanced chips coming soon, with sales already starting. That should push profits even higher. Nvidia's earnings outlook will only get better. The market will likely reward it with a higher valuation. So the main trend remains upward. The outlook is still very bullish. We expect continued gains. A price target of 153 in 2 weeks is a reasonable forecast. For Nvidia, reaching even higher levels and hitting 153 should not be a major challenge. So that's our short-term view on Nvidia. We remain optimistic. The outlook is quite positive, very bullish. The market sentiment is also strong. Optimism remains high. Let's wait and see. If you're following Nvidia and have your own outlook on its future trend, feel free to share your thoughts. Let's discuss in the comments. We can exchange ideas and analysis.